Welcome back. My name is Nigel Schroeter, and I would like to thank you for tuning in. Today we are talking about getting approved for a auto loan and why getting approved for a auto loan may be actually easier for you than getting approved for a personal loan. Okay, so I've seen where you have people that go to Navy Federal and they're trying to apply for a personal loan and they get declined, and then they get into a kind of mode where they're like, oh, I don't want to apply for anything else because I'm scared I'm going to get declined, blah, blah, blah. And I'm like, listen, certain loans are actually easier to get than other loans. And particularly speaking, the auto loan is actually easier to get than the personal loan. That's why you saw a few years ago a lot of people were applying for the auto loan and actually using the auto loan hack to be able to use the auto loan to get funds and then change that auto loan back into a personal loan by not actually submitting the collateral. As you guys know, I don't recommend that tactic. However, I want to explain why people were doing that and what allowed them to do that. So let's get started. So when we're talking about a auto loan and why it's easier to get approved than a personal loan, it's because a auto loan is a secured loan. So this may not make complete sense in the sense of some people think of secured loans purely as loans that are secured with collateral that is monetary, and they're putting up a certain amount of money and the bank is loaning them that money back, and they're using their own money essentially and loaning it to themselves. Well, with a auto loan or with a mortgage, you essentially are doing the same thing, except for instead of putting up money as a collateral, you're putting up your home or your vehicle that you're purchasing. Now, why is this easy? So why is this easier for you to get approved for this, $30,000 car compared to, a $30,000 personal loan? Well, in the event that you fail to repay the loan, now the bank has a collateral that they can recoup. So they can actually go back and get that car, which is easier for the bank to do than, say, if they loan you $30,000 and you go and blow it in the casino. There's no real way for them to recoup that unless they go after your assets. So unless they know you have enough assets to go after, it's not reasonable for the bank to lend you that type of money without there being some type of collateral to mitigate the losses. Now, the other thing is it is a lower risk for them, being that once again they can repossess it, and so it's asset backed security. Now they know they can go back and they can pick up this car and they can auction it off or sell it off and make a percentage of their money back, or even take this same car and sell it to, someone else on another loan and be able to make their money back off of financing another loan. So there's more ways for them to be able to recoup. Now, it's also easier to get approved for an auto loan than a personal loan because there are more subprime lenders that are willing to lend to you for a auto loan when you have less than perfect credit than there is for a situation where you have someone who has less than perfect credit and they just want to go and get a personal loan. Why am I going to lend money to you if I know that you don't pay money back? However, if I lend money to you to get this car, this might be a vehicle that you're using to, go to work or something like that. It's also true that it's easier, in case you guys didn't know, to get a first auto loan than it is to get a second or a third. So in my case, I have two auto loans. And so the interest rate on my second auto loan was higher than the interest rate on my first auto loan because they wanted to ensure that I was willing to actually pay to keep up 2 car payments. So that's something that you have to understand as well. Of course, your loan terms can be extended out more and broken up into smaller amounts and things of that nature, and just the way that they structure the payments for an auto loan are slightly different than how they structure them for a personal loan. And so with interest rates, it makes it a little bit less risky to the bank, as well as, it's more predictable that you're going to pay them back, and it reduces that likelihood that you're going to be missing payments. The next thing to really think about is the purpose and the designated use of that vehicle. So they may ask you, like I said, a bank may say, hey, is this your first car? Is this car going to be used for you to go to work? Is this something that you're going to be using to ride share? Is this a car that you're going to be using to rent out? What is the case? Because knowing those different cases, they may be more or less willing to actually finance the car. The other thing, and the other reason why it's easier to get a car loan compared to a personal loan is dealing with in-house financing with dealerships. So, for myself, I know even when I go to a car dealership, I typically already go with a pre-approval, but I tell them, I'm like, hey, if you could beat it, then, show me that you can beat it, and I'll take that bank. And so lenders usually know that there's another lender out there that will approve you for that auto loan. So when you talk about going to a credit union or something, they're more willing to say, hey, I'm going to loan you this money, over for a car versus a personal loan, because I know it's more likely that another lender will give you the car. As well as when it comes to the car versus the cash, the interest rate is going to be lower on the car, which is going to allow the bank to lend you more money. So if you think about it, an interest rate on a car, when I purchased my car, I got my car with a 2% interest rate, whereas I've gotten personal loans, and the best rate that I've gotten on a personal loan was 6%. So now you're looking at 3 times the interest rate on a personal loan versus a car, which means that your payment is going to be more, and therefore the banks look at that as more of a risk, and it lowers your likelihood of getting approved. Then when you look at typical, personal loans, you're looking at these loans are, in the 20 and 30% compared to a poor interest rate car loan, even in many cases, is still less than 20%. I mean, I have heard of some horror stories with cars, but typically, they'll be less than 20% when you're looking at a car. And so that's going to affect your approval greatly. And then, of course, last but not least is that a car is going to have a higher loan limit than a personal loan, just merely because that car holds a certain value. So the bank is able to approve certain cars. I've seen people go and apply for an auto loan, specifically with Navy Federal, and they go for a certain car, and the car might be $20,000 or $25,000, and the bank says, "Oh, we can only approve you for $20,000," and then they turn around and they call the bank a few minutes later, an hour later, and they say, "Hey, I'm looking at another car, and this car is $35,000." But that car holds its value better, and they'll rerun the numbers, and they'll say, oh yeah, we can approve you for this car, but we can't approve you for that one. So at $35,000, we'll do this car because we know it holds its value better, and we can in turn make our money back off of that, versus if we do this $20,000 car, when you drive it off the lot and it depreciates, it's going to be worth, a third of that. And that's not going to be worthwhile for us to repossess from you in the event that something goes bad. Of course, the bank is not saying that to you, but that's how they're achieving those numbers and in the calculations, and why you may say, okay, well, why is it that, I've applied for a larger loan and in turn I'm getting approved for this one but not for that one? The collateral plays a huge part in that. So with that being said, as always, thank you guys for watching. Thank you all for tuning in, and we'll see you in the next one. Don't forget to like, comment, share, and subscribe if you're watching on YouTube. Follow us if you're watching on any other platform. We love y'all. We'll see you in the next.